Welcome back, everyone. So many Americans, of course, watching their wallets closer than ever right now in the midst of this pandemic. And there's a lot that has economists reacting, including the presidential election, COVID vaccines on the horizon, and then some. But it's still a time of uncertainty. So with that, we bring in Dan Hernandez. He is a certified financial planner with Lincoln Investment. So, Dan, thank you for joining us, as you always do. We appreciate your time. So we are, of course, coming into the end of a wild year. It continues to change, and it's very fluid. So lots of factors here impacting the economy. We know President-elect Biden, he's full steam ahead with his transition team into the White House. To this point, it doesn't seem like it's affected the market in a negative way. What are you seeing?
Good morning, Nick. The market, since the election, the market's really been all about the vaccine. The last couple of weeks, we've had a series of very good vaccine reports. You know, first that Pfizer came out, they're going to be 90% effective. Then Moderna, 95% effective. Then a couple days later, we're going to be ready to distribute to frontline workers by December. We're going to be, ready to distribute millions of vaccines by June. I mean, it's just been a series of good reports, and that's what the market's focusing on more than anything else.
Okay, you mentioned the COVID's impact on the economy. I want to get into what you always recommend. You emphasize the importance of really having a 3-month cash supply on hand for emergency relief during possible closures, uncertainty. We've seen all that the last few months. So with COVID-19 and maybe the uncertainty of when this vaccine is going to be available to the general public, do you just suggest increasing that amount at all?
Well, it's problematic. I mean, people that have been affected to this point, and if they've been affected by being out of work or furloughed, they probably had to dip into their emergency fund. So for those people that were affected and are back to work, they're digging out. They're rebuilding their emergency fund, let alone building it,
Right.
beyond where it was. But the point is, with increased uncertainty, if you have the ability to, at least 3 months worth of income, and if you can, 4 or 5 months worth of income, build that reserve back up.
And it's an important distinction that you mentioned that not everyone has that opportunity to do that, obviously, with so many jobs being cut, things like that, tough times for so many. So what are your expectations for the economy in 2021? Now, we mentioned, obviously, the COVID vaccine is the big driving force here. Still some uncertainty as to when this vaccine will be available for everyone. So how is it going to affect the economy going into the new year?
Well, the market, anyway, and the market and economy are two different things, but the market has anticipated and built in good vaccine results. So my expectation is by second quarter and early third quarter, things are going to start to feel a little more normal. We're not going to be 100% back to where we were, but if the vaccine is anywhere near as promised, the next summer, next fall are going to feel a whole lot better, and that means naturally more people getting back to work, naturally a little more travel. There's a lot of pent-up demand for for people to travel, to go out to eat, and if the vaccine's effective, that's going to explode. So I think third and fourth quarters are definitely going to be, well, not definitely. I'm hoping and anticipating it's going to be good. The winter is still going to be tentative, and the market is really looking beyond that. The market is looking at, summer and fall.
Right, late summer and going into next fall. So you mentioned the kind of saving, if you have the opportunity to do it, the 3-month stash. But what other actions can people do now to kind of set themselves up for a point where they might not be face as much financial stress in the coming months?
There's a couple things. Number one, if you haven't refinanced yet, obviously interest rates are ridiculously low, record lows. So if you haven't refinanced, then look into it. Now, one of the issues with that has been people that have been furloughed or laid off, even though they long-term have job security, if they were temporarily furloughed or laid off, they probably had trouble refinancing because their income at that point was uncertain. So if you're back to work and have a little more stability, then again, look into refinancing because rates are historically low. So that's number one. Number two, there is an expectation among most people that tax rates are going to go up. Capital gains rates are going to go up. They may not be able to go up as much as incoming President Biden wants them to, especially if the Republicans are able to hold the Senate. But nevertheless, there is that belief that tax rates are going to go up. Therefore, it's not a horrible idea to take some income sooner rather than later while tax rates are lower. If you have things that you can sell at a profit, stocks, property, sell it now at the lower capital gain rate, because it's probable in the next year or two that rate's going to go up.
All right, very good advice. As always, Dan, we appreciate your time. So where can people real quickly go to get more information on what you guys are doing and your advice?
They can go to www.lincolninvestment.com. That's our website. My phone number is 856-489-5040 at our office in Voorhees, New Jersey. All
right, Dan, as always, we appreciate your insight. Thanks for the encouragement for folks kind of heading into those troubled waters ahead. We appreciate it.
Thanks for having me, Nick.
All right, thanks, Dan. Still ahead are all those